Are you exhausted by the wild swings in the market? Whether it's a result of a tweet, daily news flash, or central banker speaking, all cause markets to move up and down on a dime. Well, welcome to 2019. Oh, and yes, 2018. It's been a wild ride over the past 2 years, and it doesn't look like it's going to change anytime soon. But to help figure out where the market is going, let's take a look at a few different technical takes on the market. While most investors are discussing the battle between tariffs pushing the stock market down or Fed interest rate cuts giving it another leg up, most technical analysts are looking at the chart and trying to decide which way the market is going to move. In the economy, the numbers aren't good and are throwing up some red flags. And the inability of the market to push beyond recent highs is also causing some concerns. Along with the trade tariffs and negative effects on the economy, the more the market hits the upper resistance level without taking it out, the more negative it tends to be for investor sentiment. However, the recent rebound has changed the technical backdrop. Both the S&P 500 and the Dow have managed to move back above their 200-day moving averages. This clearly shows upward bias in the markets. Of course, Fed Chair Jay Powell has helped the market. With the recent weak jobs report and with a downward revision for the April jobs numbers, the Fed may now have the green light for rate cuts. Looking at this chart here, some analysts are seeing a triple top, which could spell disaster. On the other hand, many see what could be an inverted head and shoulders formation. That would mean that the low in the market back in December of last year would form the head, and the trading that takes us higher would form the second shoulder. And this is a bullish indicator and could lead to new highs in the market. If the Fed does lower rates, this will force developing economies also to cut rates. As for the chart, the argument is that each peak is higher. This shows that the uptrend remains intact. Then, assuming that the trade war does not kill economic forecasts, then it can be very likely that the trend will continue. And do you remember what year it is? Yep, it's 2019. And what that means is that this is a pre election year, with 2020 being the next presidential election. So take a good look at this chart here and what it shows for pre election year seasonality. This chart should look familiar. You have the 4-month ramp out of the gate from January, then a correction into the end of May, and then we're off and running with no looking back. So let's now take a look at our charts. So now we're looking at our 20-year monthly chart on the spiders, the SPY. And as you can see here, we've got that perhaps double top there. Now, I don't think a triple top is necessarily going to be the problem here. I don't qualify this as a triple top since that's much lower there. But moving on down here, several weeks ago, probably 3 or 4 weeks ago, I told you, looking at this chart here, that when we made that move, the fast line moved toward the slow line and then got reflected back. To me, it kind of looked like this sort of time frame there, 2015, 2016 chart. And there's other similarities in the pattern going back further into year 2000. But basically, my point was that I had a sneaky feeling that the market was trying to do a basing in this time frame here, with this reflection being only very slight. We would move down and then head back up, and boy, does it sure look like that's what it wants to do. Now, in the last market update, I said that the weekly chart was showing that we were still heading down, but that weekly chart is getting bent by recent activity. So there is somewhat of a contradiction between the monthly and the weekly and even the daily chart. But what the monthly shows right now is that things are elevated here above 10, which is relatively strong. We had that reflection, but that reflection is very shallow. So the market wants to move up. So perhaps it's already pricing in any discount with regard to the Fed funds rate. So moving on down here, Similar circumstances in the histogram there with this low and then the move up reflection and then that low there. It looks like things are improving up in that direction. Price rate of change, one of my favorites, looks like it wants to try to develop a base here in this area, not unlike this here. So pay close attention. These oscillators are all showing that the market does not want to stop here. It wants to head up. Volume looks good, and then the Williams as well. All the oscillators are showing that they want to run. So we have to pay close attention to that and keep our minds on the possibility that the market wants to head up whether we like it or not. I would like to have a better correction here. I think that would be healthier for the market, but who am I to say? So for today, that's ChewDog Charts. Thank you.